Hey, good morning. Let's go over today's trade plan. So in the overnight session, the buy side has been dominant, and at this point, ES is set to open near the 63 to 65 initial resistance zone, which is the primary inflection point. So this is the area where we could either break out and then push to new highs, or the market could technically attempt a breakout, and if there's not sufficient momentum or broad market strength behind it, then there's technically a possibility that it could fail as well. So this is really the decision point. But we know that the larger time frame bias is bullish. The short-term bias has also been bullish. So if we got a breakout, it would be in alignment with the prevailing trend, and we could go higher into 69.75 to 71 quarter and 74 to 76. So beyond 65, understand that there is no hard resistance, but based on the range expectation, we could test 69.75 to 71 quarter and 74 to 76. Beyond that, things would get difficult, and a move beyond 74 to 76 is low odds, and 80 to 82 marks a range extreme. So most likely, even if the market breaks out, we won't get there. 69.75 to 71 quarter and 74 to 76 are the higher probability areas that could get tested in the event that we have a successful breakout beyond 65. In the event of a failure at 63 to 65, we can quite easily pull back towards the previous VPOC and close and the overnight low. And if we're seeing intraday weakness and it's a failed breakout attempt, then we can easily even come right back down to the recent 2 to 3 day balance area low at 55 quarter to 57 quarter. Technically, buyers can still be active and defend the 55 quarter to 57 quarter zone, but at this point we are going to have to see how the market is approaching that area and how the situation is developing in real time, since we are trading at all-time highs. So we have to determine whether there is sufficient reward potential at initial support at this point. And if we're going down on excess weakness and sustained downside momentum, then there's a possibility that we could even break initial support, and we'll have to head lower in order to attract the next group of responsive buyers. So in the event of a break below initial support, we could quite easily test the low from a couple of days ago at 52.75 and the 47.75 to 49.75 support. Now, since the larger time frame bias would continue to be clearly bullish, buyers can be active when the market gets overextended or exhausted into support like 47.75 to 49.75, 46, and especially 41 to 43, which marks a range extreme, and 36 to 38 is the bottom of another 3 to 4 day balance area. So that's very high odds to attract responsive buyers, but it's also really far away and unlikely to get tested. So heading into the open, we know that the buyers are in control. We are still going to favor the long side, but we have to balance that with the idea that the market is at a short-term inflection point. And if we're not seeing broad market strength and sustained upside momentum, then a breakout attempt beyond 65 could still fail. So it's not a given, and we can't simply predict that the market has to break out. We know that the dominant trend is definitely to the upside, and as long as in real time we're not seeing any red flags, then it's better to go with the breakout rather than fade it. But if the market is attempting to break out and the AD is just simply not participating, or there's a bearish disconnect, or if there is no momentum behind the move, then it may not really get too far, and in that case it'll be risky to initiate a new long at a very high price. So if the market is going to break out beyond 63.65, we do want to see the real-time situation support the upside breakout. So if you look back just 2 or 3 days ago, when the market, for example, was breaking out beyond the 51.52 area, it was doing so with a upward trending advanced decline line. Tick was holding way above zero, so all the prerequisites were there to support the idea of a breakout. So we'd have to see a similar situation. Not exactly, but at least we'd have to see that upside momentum, and the AD would have to be in positive territory and trending to the upside. If that's the case, then we know that we could go higher, and since there's no hard resistance, We could go to the 69.75 to 71 quarter zone and even 74 to 76. But if we attempt the breakout and there's no momentum behind it, the other markets are not participating, then there is potential to still fail up there and then just drop right back down into this recent 2 to 3 day balance, and that could take us down to initial support. So those are the main ideas heading into the open. Let's see if the buyers can really push it beyond 63.65. This is really the main inflection point heading into the open, and we'll take it from there.